Hello traders, it is Tuesday, August 27th. We are after the market close and I'm going to be doing my weekly video a day early because the trading volume is really going to fall off heading into the Labor Day weekend. So before that happens, I want to try and see if we can find some opportunities that you might be able to take advantage of Wednesday or Thursday. But as you'll see, the bottom line is the market conditions are very, very volatile. This is a low probability swing trading environment. So the best trade you can do right now is no trade. However, I'm still going to find some great picks just as I did last week. Everything that you see today is going to be available on Option Stalker. You can get Option Stalker at www.oneoption.com. If by chance you're watching this video on YouTube, I've probably posted it a week late. I post it instantly to my members so that they can take advantage of the trades, and I posted a week later on YouTube so that you can go back and see how the trades actually performed. If you haven't subscribed to my YouTube channel, please do, because sometimes I release these videos, I'd say probably about once a month. I'll release it real time so that you can take advantage of these trade ideas. In fact, this recording is going to be posted real time. So I hope you take advantage of it. Please subscribe to my YouTube channel. If you like the video, please give it a thumbs up. Now, every single week, I start out with my previous week's picks. Before I get to that, I want to talk a little bit about the market. This is a chart of the S&P 500. This is the Option Stalker platform. You can see how the market pulled back sharply, and we have had extreme volatility. Look at these long candles, long red candle, long green, long red. Look at these moves. Lots of gaps higher. Ultimately, as I've stated in my daily market comments, the market is going to try and hug this 100-day moving average while all the uncertainty is being resolved. Now, it's not going to be resolved immediately. There are a lot of long-term pending issues. That's why we're getting the chop. The market is also very nervous in August, when you have the Fed in recess and Congress in recess. There's not a lot of economic news to really latch onto. Earnings season is over, so traders are trying to get tidbits of information wherever they can, and hence we get all of this type of volatility. This is going to continue probably through most of next week, although next week we do get some major economic releases. So trading should return back to normal probably in a week, maybe 10 days or so. So right now, we don't have a lot that we can really do from a swing trading standpoint. We're going to lean on this 100-day moving average. If we're above it, we're going to favor the long side. If we're below it, we're going to favor the short side. You can see that there's a support level that's forming here around the 282 level. Now it's crept up to the 283 level versus the SPY. And we've got firm resistance at the 50-day moving average here around the 294 level. So this is pretty strong resistance here. This is pretty formidable support right here. If we ever do break below this, the 200-day moving average will be an easy test for us. And I'm expecting us to go there sometime in the next few weeks. So I'm going to give you a mix of bullish and bearish picks, and your marching orders are to look at what's happening with the market relative to that 100-day moving average, use that as your guide and which of these trades you should be taking, and then always review the trades and look for relative strength or relative weakness. That is our edge. So let's go through all the picks from last week. And as I do that, I'm going to highlight 3 stocks, because last week I did a video. The very next day we had a market pullback, and I said to members, that market pullback told us exactly where the relative strength was. Here are the 3 stocks you need to focus on. And I posted that video to YouTube. I believe it's been released to the public. So let's take a look at those 3 stocks first. And I'm going to go into lists. and I'm going to take a look at August 21st, and the first stock on the list was DHI. So DHI, 1, 2, 3, 4, you can see had just broken out here. So the stock is pretty much where it started off a week ago. I'm going to overlay the SPY, and you can see this is what the market's done since the video came out. Boom! Huge market decline. Well, what did the stock do? Right where we entered. On the wrong side of the market, but because we're in the right stock, we didn't have our head handed to us. That is the power of what we do, and that's why if you watch these videos week in and week out, that's why we're constantly posting winning trades. So let's take a look at the next candidate, which, by the way, once that 100-day moving average was breached on the SPY, you needed to be out. And it happened the next day. You should have been out here. I mean, the stock was up, but the market was falling. You should have just taken profits. I'm supposed to be out of all my trades. If the SPY breaks the 100-day moving average, boom, I'm done. I made money. I'm thankful. And there's no way that I could have possibly predicted that China was going to come out and increase tariffs last Friday. And that's what roiled the market. So you have to expect in this environment that there are going to be surprises. So the next stock that I mentioned to members to be in was Roku. Look at this. This is where we get in. That's what the stock's done. You could have actually made money on this one, good money, with the market falling down. There was one other stock I highlighted, and that was SHOP. Look at this one. Same deal. In here, look at the rally. You're making money even though the market's going down. Now this is rare, and this is not what we try to do. We want to be on the right side of the market and in the right stocks. When we get both pieces working in our favor, these stocks skyrocket. So let's take a look at all the lists. I don't cherry pick. I want to look at all of them. AYX, look at this. Held up very, very nicely during the market decline. CELG, from there to there, actually is trading higher. DHI we looked at. ENPH, down probably a little bit. I mean, you would have been able to get out and make money on this stock, or at least scratch even in horrible market conditions. MDT, same thing, treading water in a horrible market. This stock wants to go higher. Every one of these stocks I'm showing you is still good for a bullish pick. PINS, you can see how it moved higher and then now it's been pulling back. This would be a legitimate loser. Okay, this is one that I would say you would have lost money on if you would have bought this, but on that rally here and the market closing below the 100-day moving average the next day, that's where you'd have been out. Your losses should have been relatively small. And then Roku and Shop we already took a look at. This is how this works. This is a systematic approach. Option Stalker helps us find these stocks. That's why it works. And it's so easy. If you're a swing trader, this whole process, I'm going to go in, I'm going to run a couple searches. I'm looking for a couple of bullish picks, looking for a couple of bearish picks that you can take advantage of. That's it. We're in and out. We're done. Along the way, if you happen to notice some stocks that will be setting up well, then you want to drop an alert line. You log into your platform the next day, and all of a sudden you've got 2 or 3 alerts that have popped up, and now you don't even have to mine for the stocks. They're sitting right in front of you. You click the dialog box and it takes you right to the chart, and then you can decide if you want to take action on it the next day. So let's go in. I'm going to use my custom scanner, and I'll click custom search, and let's start with the bullish side. Okay, so I'm going to mark option liquidity. I always want to have good option liquidity, so I'm going to go with a 3 or higher. And I'm also going to be looking for a stock with relative strength. Show me something that's strong relative to the market on a 2-hour basis, 4-hour basis, and a daily basis. So these should be some pretty good candidates. And I'd like to see a stock with, well, let's see what we turn up first. Yikes. That's a lot of candidates. And that's okay, because that means that we can add more and more criteria. The more restrictive we get, the fewer the candidates, but also the more boxes I mark in here, the higher the probability that that trade is going to be successful, because that stock has met so many different criteria. But I'd like to see a stock with heavy volume, because in this light volume trading environment, much better. In this light volume trading environment, I want to see something that's got some volume to it, that has a chance to have momentum. I'm going to click through these stocks, and we're going to see if we can find a couple of really good opportunities. I'm going to move it off screen because it's a little easier for me to work with. And I'm going to take off the overlay here because it gets in the way. I'm going to put up another indicator that does essentially the same thing. It's the 10 SI indicator. As long as this is above 0, we know that we have relative strength on a daily basis. This is Activision, ATVI. That is a nice breakout on big volume. You can see that horizontal breakout right here. You can track it all the way across here. That is the support level that we want to hold. I like this stock. I would want to try and, now you have to have the market above the 100-day moving average, which means the market's going to be moving higher. The stop on this would be right here at this 50-40 level. We want that breakout to hold. So in particular, that low of the day right there, we want that low to hold. As long as it does, we'd stay in the position. If it's breached, we're going to exit the trade. And that opening price is $50.50. So that would be your stop. If the market goes above the 100-day moving average, and obviously if the stock is above that point, you would want to buy it. So I'm putting ATVI on the list. CDE, that's a gold stock. I'm not a big fan of gold. I like this Costco breakout a lot. Now that's way too high for me to want to buy Costco. This stock does not make gigantic moves like that, and when it does break out, it tends to roll over and pull back and fill in some of that. I need to see it about halfway up this green bar, and I'm going to call that somewhere around the 285 level would be where we want to buy it. Our stop is going to be right in there, which is the previous high at 284.31. So if we can buy it, let's go a little bit higher. We've got the stock closed up at 292. So we're going to raise this. We're going to say our entry point on this is 286 and our stop is 284.31. So we've got about $1.70 stop. That's our downside risk exposure on it. But I do like Costco. That's a nice move. I think we're going to be able to buy a pullback. In this market, I would not be aggressive with anything. There's no need for it. Market's all over the dang place. This is an awesome breakout. Look at that stock go. It's got to pull back a little bit for me. That is a monster move. It wants to go. Big volume, big relative strength. It makes the list. FSLY. But I'd really like to try and buy it somewhere around the $28 level. See if it can pull back temporarily. A stock like this should have some volatility. You can see here, all the way up, all the way back down. That's a big daily range. I'm not going to chase it. I can either buy it at $28 or I'm going to take a pass on it. If I do buy it at $28, I want this breakout to hold. And the high there is 25.55. So we buy it at 28, our stop is 25.55. I like that one. That's nice. Pepsi needs to get through resistance. Roku, buy Roku. Shop is on the list. You can buy Shop. SLV, I'm not a commodity type trader. Silver looks great. Gold looks great from a technical standpoint. And Verizon. So those are our picks. That easy. So I'm not going to add Roku and Shop to the list because they've been on the list for actually a couple of weeks and they were on the list last week. So they just keep moving higher. I'm going to move this back into range so that you can see the search I used, relative strength on these time frames, heavy volume, good option liquidity. So now let's go in and let's find some bearish trades. Let's do the counterpart. Relative weakness, relative weakness, relative weakness. Let's see if we get anything with the heavy volume. Ooh, we do. Okay. Let's see what we've got here. Just going to click through. And if I don't see something I like, this is nice, but it's getting overextended. Boom, 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 down. It should have a short bounce in here somewhere, so I'm not real keen on that. HPQ after earnings, gap down, stock treading water here. I'm not going to mess with that one. It's already sold off pretty hard. Philip Morris, what the heck? I mean, there was a merger announcement today, so look at that bar. Not going to mess with that. Snap. Nice little downtrend here. Coming up on horizontal support through the 50-day moving average. Boy, you can see some old alert lines that I had there, which I can delete now. I was trying to get long, never pulled back. So yes, I think this could be a decent short. It's still got a nice strong uptrend to it though, still around that 50-day MA, so I'm going to avoid that for now. I'm going to see if I can find a little bit better search. This is not bad. We're going to zoom out, use the magnifying glass. There's some pretty big horizontal support right here. Stock is very choppy. I like nice orderly price patterns. I don't like chop. That's choppy. Don't see anything there, so I'm going to pull back into range here. I'm going to try a little bit different tactic. I'm going to take off the heavy volume. I still want relative weakness, but I'm going to look for a stock, oddly enough, that is above the 50-day moving average. Why in the heck would I want to do that? Because I want to find something that's been at the top of its range that in the last few days has started to really weaken and is starting to roll over. There's a nice manageable list of stocks. I'm going to move it off screen very quickly. And let's take a look at what we've got. Apple. Apple. Couple of things strike me here. First of all, you've got a big horizontal resistance level right here. Stock pokes up above it and then it gets slapped right down. That was after earnings. Just got smacked. Now, I remember this being market related. The FOMC was the next day, so it gets slapped right down. That tells me there's some selling pressure. Comes back up, tests that resistance level, and boom. Now it's right back down again. A couple of big green bars here. You can see how the relative strength is starting to wane, and it's actually weak relative to the market. Right above this 50-day moving average. The other thing that I notice offhand is follow the cursor. See that upper trend line? See that lower trend line right there? This is a wedge formation right there. Forms this arrowhead. That tells me that the stock is going to break one way or the other. Right now, given that it's getting weak relative to the market and that it's testing some moving average, I'd say chances are it's probably going to break to the downside. I wouldn't short it at the 50-day, but I would short it if it is able to breach the 100-day. Apple is not going to make the list, but it's something you should watch this wedge because that will set you up with a nice trade. Next is BJ. I like this actually, looking at it here. Got a nice compression here, big earnings gap, able to hold the major moving averages. This is nice, higher, higher. And the market has been down, and you can see the relative strength in this stock. So no, we're not going to short this. I actually kind of like it for a long position. A little bit choppy for my taste, so I'm not going to bite on that and add it to the long list. This is interesting. I kind of like this. A downward sloping 200-day moving average tells me right off the bat, and there's the 100-day, that this stock has fallen hard. Going to zoom out. Oh yeah. That's why those moving averages are moving lower. So we'll go back to a normal view. It bounced, and then now it's starting to give some of those gains back. There was your earnings bounce. This is a horizontal resistance level right here, and it's able to work its way through it, but now it is poked back below it, and it is below the 200-day moving average. If the S&P 500 or the SPY is below the 100-day moving average, which it is right now, I think this is a good short. Try and short it on a little bounce if you can, and use a close above this 200-day moving average as your stop. So there's a short position. You can take that right away. KBH, home builder, actually pretty strong relative to the market. Maybe faltering recently, but it's been pretty strong. Here you can see resistance right here. Stock doesn't really have much of a trend. It's just kind of chopping back and forth. So not too keen on that. LEN, same thing. Home builders have kind of been in that mode. Micron Technology gets through this resistance level very nicely, peaks, gets some profit taking, and now it makes a lower high. And you have a downtrend forming. You also have a tiny wedge formation right here, just like we did in Apple. You have the 50-day moving average to get through. You got the 100-day close by. You have horizontal support right here at the $40.80 level. Then you've got the 200-day just below it. No. Too many barriers for this short to work out. 1, 2, 3, 4. Keep looking. Not bad. WDC gets back to this resistance level right here. Can't quite get through, can't quite get through. That's a double top formation. And we're starting to come down and test this horizontal support level. So the way you approach that is you drop your alert line. Should have clicked GTC. Now I'll have one intraday and one GTC. The GTC alert will be there until the price condition is met. You had just seen earlier how I had a price alert on Snap, never hit it, and I think I probably had it out there months ago. So when it does meet this price condition, you're going to know about it. I like WDC as a short if it can get through this support level right here, and the support is 51.60 as I see it, and you can use the 50-day moving average. So if it gets down below 51.60 and the SPY is below the 100-day moving average, I would short this stock, and I would use a close above that 50-day moving average as your stop. We got 2 shorts, we got 3 longs. I'm going to add them to the list, and we're going to call it a day. Go into lists, click create. I'm going to call it AUG 27. Going to add ATVI, COST, FSLY, CVS, and WDC. So that is our list. Save and close. Now every time I come back into the platform, I'll be able to see them. The possibilities with this custom scanner are endless. When you start learning how to run searches, and for members, I post these videos every week. I'm going to show you new ways to find stocks. Possibilities are limitless. You're going to find so many great stock candidates. And if you look at the criteria that you're able to use, you can find anything using this search criteria. So going to minimize this, and we're going to take a quick review. So we want ATVI to hold this breakout right here. We need the 100-day moving average to be breached on the SPY, so we need the market above that. Then we would be a buyer here as long as it's able to hold that opening price, or low price, excuse me, right there. Closes below it, we're out. It's a choppy stock too. Not one of my favorites. Okay, chop back and forth, back and forth. I'm hoping that by the time the market gets through the 100-day moving average, that the stock is starting to show some real nice constructive price action higher. Watch for relative strength. Big breakout. We want to try and buy it around the 287 level. We're going to have a stop right here on a close below that breakout. Then we're going to be out. CVS is a short. We think we can short that right now. We're going to use a close above the 200-day moving average as our stop. The market is below the 100-day moving average, so we can go that way with it. We're going to try and buy this stock near the open of today's bar, right around that $28 level. If we're filled, we're going to have a fairly wide stop, and we're going to use this as our stop. We want to see that point maintained. If we close below it, we've got to take our losses and move on. Very, very great relative strength, big volume. This stock wants to go. Quick overlay of SPY. SPY down, 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 down. Stock, boom, higher. Final stock, WDC. This stock has a double top formation here. 1, 2. We've got our horizontal support level. We have the 50-day moving average. If those levels are breached, then we want to take a short position right here, and we're going to use the 50-day moving average as our stop on a closing basis. So if the stock closes above the 50-day moving average, we are going to exit the trade. Now I'm going to remove that. Everything in the platform is toggle on, toggle off. All the major, moving averages, the squeeze indicator, my volume indicator, 10P, which is my proprietary indicator for S&Ps, 10SI, the SPY overlay, buy and sell signals, which are also in the platform. Toggle on, toggle off. So the closing note that I want to make here is that we've got a lot of market volatility. If you're a swing trader and you're not able to watch the market during the day, don't trade. You do not know what the heck is going to happen overnight right now. It's going to take a while for things to settle out. It very well could be that in September or October we take out the 200-day moving average and we start to get into a downtrend. There are a lot of dark clouds looming right now. Could also be that the Fed cuts rates and maybe the trade tensions with China ease. Maybe we get a deal done with Japan and everybody's feeling a little bit better about the market, and we could come back up and challenge the all-time high. Right in here, we're in no man's land. So if you can't watch the market, don't trade it. Don't deal with all this light volume chop. Wait for things to settle down. But if you are a nimble swing trader and you're able to watch the market during the day, use that 100-day moving average as your guide. Lean on it. When we're below it, favor the short side. When we're above it, favor the long side. Thanks so much for watching. Again, subscribe to my YouTube channel. Please give it a thumbs up if you like the video. I'm going to see you next week, and I'm going to show you some trades that worked out really well. So even though we're balanced, puts and calls this week, longs and shorts, I'm confident that these stocks are all going to do what they're supposed to do regardless of what the market does. Tune in next week and we'll see. Thank you.